Hopefully now you can hear me.
Нет. Ты можешь?
Hopefully now you can hear me.
Да.
Yes. Hello everyone. I will start again. My microphone is not working today, so I'll use a standard microphone from the laptop. Hopefully it's not very bad. So I'm Ivan, and this is the first module for Stock Markets Analytics Zoomcamp in 2026. I'm running this course for the third year, and I'm very glad to see all of you on this live stream. Today we will talk about data-driven decisions and data sources that you can use for your stock-related analysis. I'd like to tell you that this is not an investment advice. All data, ideas, and methods should be used wisely. They may or may not be suitable for your situation. So as I have said, I'm doing a business intelligence job at Google for the last 12 years. So analytics is my major specialization. I also have an educational background in computer science, finance, and data analytics. I founded Python Invest 5 years ago, and I started to work with Alexei at datatalks.club about 3 years ago and created this course. And of course, the major goal for me is to learn from you, to test new ideas, to look at the new data and apply this for trading. So my major objective is to teach you how you can use your programming analytical skills for making investment decisions. So the agenda for today is as following. I will answer a few outstanding pre-launch questions. I will also update you on the questionnaire that I've briefly talked about at the Q&A session with Alexei. And then there will be a short story about making data-driven decisions, but this story is compiled from a dataset that you can download from the open sources. And finally, we will look at the Colab setup. I mostly use Google Collaboratory or Colab shortly, or interactive Python notebooks to perform the analysis. And only at the last module, I compile all of this to one project and set of Python files and make it running as a one system. So I use Colab just because it's easier, it's standalone, there are no dependency on the environment, and it is free. So here is the same link that was shared with you for asking questions, and we'll take a look at a few of them just on the next slide. If you have more questions or if you want to vote, just do this and we'll discuss it next time. There are 6 questions that I want to cover today. I've seen that actually many of you want to change your job and you want to change careers and move into quant trading. Unfortunately, this is outside of the scope of the course. I do not work in this area, but I have some friends working, so that's why I have some recommendations for you. So if you have a PhD in math, physics, or an area like this, you may be considered as a candidate because you know and mathematics, and you can learn quickly all of the mathematics used there. Another idea is that you can win or get some prize at the Kaggle competition from Jane Street, XTX, or other hedge funds. So if you can prove that you're actually very good with the data science field, and you can predict better than internal models from those companies, they may be willing to hire you. Another idea is that hedge funds, they normally operate as a set of small groups, and only one person in those groups is a quant. Other can be data engineers or software engineers. If you can write efficient code from high frequency operations, you may be eligible to join, even if you don't know a lot from the finance field or trading field. So question number 2. Is it advisable to automate a trading system where you basically on trade analysis by Telegram signal channels? As if I understand correctly, the people are asking if we can use the messages in the closed or paid groups and Telegram channels or some other channels, like this company is attractive right now, and use it for our systems. Frankly speaking, I do not advise doing this, but I have no experience of using Telegram channel signals. I think there is a big bias or incentive of a front running from owners of these channels. So if they tell you to buy some stock, they have a few thousand people who are in that channel, they know that few hundred of them will buy in the next hour or day, so they can build some strategy around this. When many people are buying, they know where a stock price can move. I can tell about myself. I use Telegram as a convenient system to create a front-end chat experience for my applications. So in this case, you can create your bot, you can create your mini app. You don't need to create a web or mobile user interface. So it's much easier to test the system that you have, and it's always on your phone. It has push notifications, and it can also receive commands, text commands. So that's how I use Telegram, but it's not connected with the question asked. Question number 3, for production systems in this area, what's the best programming language? I do not know. I haven't seen production systems in this area. I use Python, and this is enough for me for everything, for data analysis, machine learning, and other means. Which stack will we use to make the AI agents? So we won't cover AI agents in this course, but I will change the and project criteria, and if you create some module or additional functionality for an AI agent, whether you want to provide a chat experience for your project or summarization or generation of new ideas, you will get additional points. And also I had a recent workshop with Alexei on building an AI agent in June. I added that workshop to the main README on the GitHub repo. Next, are there anything we should do in the meantime as a plus until the beginning of the course? So the top recommendation is to watch previous lectures and try running the code. So lectures and modules are generally the same, or they look the same. The data may be quite different, even from the data that we've seen 1 year ago. So if you're prepared, if you can technically run everything and understand, this is a big help, especially for this module number 1, which has a lot of links and a lot of various data sources and ideas. What are the 2 free data sources you use? So we will cover it today, and you have a Python notebook shared. So the free sources are YFinance or Yahoo Finance unofficial, and FRED, which is a macro indicators US database. Questionnaire. So in the last week, we've seen probably 50% more applications. But what I've discovered yesterday, that some of the applications, roughly 100 of them, are duplicates, and people use the same email and apply it again. So I built a clean analysis of the most recent stats that I had yesterday from more than 800 people applied to the course. So we are a big group. We are representing more than 60 countries with 1 participant or more registered. And top 10 countries, they are 54% of all respondents. Leading countries are India, United States, Canada, UK, Germany. One thing that I forgot to mention last time at the Q&A, and this is a new question that we've asked this year, programming with AI experience. So as many of you know, there is a massive shift happening right now, or actually last 2-3 years, and I asked how you use AI for your day-to-day jobs. So nothing outstanding in this analysis, as I've suggested. Most of you use traditional ID and AI plugin, where you write code and generate some additional code snippets with the plugin, and usually it comes as a paid API that is installed to the ID. It is possible to install a local version of it and do a programming on a free local LLM if you have a powerful computer, but I haven't seen many people doing that. What is interesting that 22% of respondents are still not using AI tools for programming. And this is sad. I hope you all start using it, because my major call out here is that I hope that all of you will spend less time on doing all practical assignments. So you should be spending not 5 to 8 hours on solving the homework, but maximum 1 hour, and spend all other time on reading new articles and getting new ideas what you want to build. Then I looked deeper at the previous experience with datatalks.club. As I have said previously at the Q&A, we have here a very experienced crowd of people in programming, in machine learning, in MLOps, in data engineering, but probably not in finance and trading. And approximately 40% of respondents said that they took at least one course with datatalks.club before. So it is convenient that the structure of the course, home assignments, system to do home assignments, projects, and peer evaluation is exactly the same as you have seen in other courses of datatalks.club. I also looked deeper at the question applying the knowledge or investing idea, and I highlighted with the green ideas that have a good fit with this course. So we will be talking about algorithmic and automated trading systems or bots. We will be covering machine learning and statistical modeling and market forecasting. I would say that we will cover only 1 or 2 ML models like random forest or regressions, but feel free to use any model you like. We won't cover much stock screeners and market analysis dashboards, just because it's more technical, and there are a lot of freely available tools to do this, and I'll cover one from a trading view today. We won't cover at all portfolio management optimization and rebalancing, but we will discuss backtesting, simulation, and strategy evaluation. I also see a lot of interest on the fundamental analysis, equity valuation. This is topic number 6. And I'd love to use those stats, but I couldn't find a free source with the stats for the last 20 years. So if you have those data sources, of course, please use it. We will build financial data pipelines, we will use APIs, and we will do the engineering of the infrastructure, how you can call your project at a regular basis. Almost no risk analysis and financial risk modeling. We will look at the news and sentiments data as an example, but generally speaking, I don't have it in my data frames. We don't do agentic AI and LLM powered investment assistance. This is personally very interesting for me. I couldn't automate it fully with AI, so you can check my AI bot building webinar in June, and I used AI only for summarization or data retrieval from different sources, but not for creating an investment thesis, backtesting the data and comparing this with an existing hard-coded systems that I have. So if any of you succeed in this, please share. Multi-asset and alternative market applications. So firstly, I want to say that we cover multi-asset. Even in this seminar, we are looking at the global stocks, although my data examples are mostly about the US stocks, but we also look at the bonds, at crypto, at commodities, energy markets. So in many cases, we use stats from other assets as data inputs for the prediction model. And to summarize, I see that you may have few objectives to finish this course, and I've graded those objectives from easy to hard. So first and the easiest thing is to replicate all notebooks and code, Python analytics and financial skills covered. It's quite easy. You can clone the repository, you can run the code, you can check the output and adjust for your market. Then you can register with the broker, transfer some funds, and practice with small trades, potentially using the ideas that you can find in this course or in your notebooks that you run. I know that some of you are very competitive, and that's why we have a leaderboard for people who are solving all homework assignments and answering to all open-ended questions and competing to get the highest number of points for the Capstone project. This is not strictly required, and the criteria to finish the course is quite low. You don't actually need to do any of the home assignments. You just need to to send one Capstone project and to peer review 3 other projects. So next level is you can create your own project that will generate trade recommendations. So build a trading system in a similar fashion that I cover in this course. And if you customize the code shared for your market, product or idea and experiment with different models and fine tune it, you start investing, you start using this system. Hopefully, and this is the next level, you can see potential profits from your trading with real money. And the ultimate goal, at least for me, it is to have a long-term objective to achieve a sustained profitability. Say every year I can get more than S&P 500 growth in every year that I'm trading. So that can be one of the goals, or it can be another goal. If you're investing in Singapore, you can compare with your index there or with other alternative options that you have for investing money. Okay, so let's move on, and now we talk about data-driven decisions. Firstly, if you think about any economy, and one indicator that we all study at school is GDP. And you can easily get these stats from a data source which is called FRED. I have links for you, and here is a code snippet. So the Colab is shared on GitHub, so you can see it. First module, there is an updated README with a link to this YouTube streaming slides that I'm presenting right now and code in Colab. You can open these codes, copy the link, and open colab.research.google.com and open this notebook from a GitHub, and then run this. So this notebook is my work version of the data that I generated for today, and you can quickly find the related time series by looking at the graphs that you see at the slides. For example, for GDP, there is pandas data reader, which is a wrapper around this system called FRED. So pandas data reader, it has one function, pdr.datareader, and you specify metric that you want to download, and then you have it in the data frame, and I generate additional metrics here, growth year over year and growth quarter on quarter, because GDP potential is actually measured in billions of US dollars. So you can read about it by following this link, and you can navigate to any other metrics you want to include into your data set. So for GDP, the story is that economists believe that there is a long-term band for the US economy to grow at 2 to 3%, and if this GDP is inside of this band, then probably there are no shocks in the economy and everything works as usual. So you can apply your normal trading strategies. But if it's outside of that band, then probably you need to adjust. and expect to have either bigger returns if the economy is expanding, and there are a few Asian countries that are growing faster than the US, or if it's contracting, then financial market will be probably contracting as well. Also, some of the news are on macroeconomics are quite important for the financial markets. So I have one link from tariffs and global valuation news article from Q1 2025, and I think it's still important. So we have a lot of changes and announcements in the US tariffs, and some companies can be growing or shrinking just because of this news. So next, if you think about yourself, so and the metric or indicator that affects all of us is probably inflation, or as economists say, consumer price index. So in the US, it's around 2.5%, and it was declining over the last few years. After COVID, it went up to 7-8%, and now it's still declining. So that means that economy may be cooling down, and maybe the financial markets should be cooling down as well. But that's not what you see right now in the US or biggest companies. So this is one aspect, and probably you need to include this macro indicator in your model data frame, but it doesn't mean that it is 100% definitive that it will move the financial index after just one important macro indicator. Now we think even further. Say I live in Ireland, and can I actually save money or cash money with interest that is higher than inflation? And I've checked this just yesterday, and the offer in Ireland is between 2 and 3.1% that you can get from a commercial bank, while the inflation in Ireland is actually 3.4%. So it is higher than the US, and if I get some interest on my cash in the bank, I actually lose in actual value of the money. So first strategy, I've covered a few strategies here, what you can do with your money before you start investing. So first, do nothing, zero interest, full liquidity. You can use your cash any day, but you are losing every year. Second, you can have bank saving accounts, and it has a money protection scheme, but generally speaking, it is lower than the inflation. So you are still losing some value from your money, but it is something. So it's almost risk-free up to a certain amount. Strategy number 3, you can use money service businesses. So I have one example, which is Wise, and it can give you slightly higher interest on your cash than other commercial banks, just because it's a global company. It uses financial transactions to cover the money from their clients, so they may be able to offer a higher interest. But generally speaking, these interest rates are actually going down as in the same direction as you have seen with the GDP growth in the US. And finally, broker accounts. So also, depending on the country you're based in, you may want to choose your local broker in Germany, in Netherlands, in the US, or in Ireland. And all brokers, they have different programs for uninvested cash. So if you don't want to take risk on your money, you can just open a broker account, and in some cases, like Trade Republic or integrated brokers, you will get some interest on your cash. Okay, and now we start thinking about investing. And before we talk about stocks, let's think about interest rates. So how actually banks select this interest rate that they can give to you on your cash funds, or brokers. If we talk about the US, the most important rate is a Fed funds rate, and the data source is exactly the same. So you can click this link, FRED, and the metric is called Fed funds. So if you click it, you will see the graph, you will see the explanation. It's very helpful, and suggested research with this metric. So it will give you a good understanding of the metric. And the trajectory from the last years is that Fed funds rate is going down. So many economists and investors, they are waiting for the next meeting of a Fed, where they decide whether they leave the rate unchanged, whether they make it lower or higher. So right now the rate is 3.63, and this rate is unchanged from the beginning of the year, probably from February. And if you know that this rate will go up or down, then the valuation of all stocks should change in theory. So this is an important indicator. But this Fed funds rate is an interest rate at which depository institutions trade federal funds with each other overnight. So it's banking and financial institutions, they trade with each other for just one night. If you think about yourself, which metric is closer to you, to your assets? Normally, people are using this metric called risk-free rate that you can apply for discounting. Say you have $100 today, and right now risk-free rate, which is not a one-day rate but 3 months T-bill rate in the US, and there is another data series on FRED on this. But what is important for you is that you can apply this approximately 4% as a discounting factor for future value of money. So next year your $100 will be 4% less valuable. Or in simple terms, you need to have roughly 4% or more in the investment return, so that you want to be able to have the same value from these $100. And now we can move on to the bonds, which is debt which is issued by big companies, and you can buy this debt. So at some rate. And normally this is the last in. Bond yield is a risk-free rate plus premium for risk. So big organizations, largest organizations, they have less risk of going bankrupt. So they will pay less premium for risk, and smaller organizations, they can pay higher premium. Right now, you can get 4 to 6% in bond yields. So you can select on your trading account a strategy that will invest into the government debt or in corporate debt and achieve the returns of 4 to 6%. So you can see that this is 2 to 3 times higher than you can get if you just work with a bank. And finally, now we talk about stocks, and probably one of the most well-known indexes is S&P 500, and we will use it as a benchmark for many of our home assignments. So it tracks 500 leading US companies, and the blue line is returns or growth of this benchmark, and you can invest into this benchmark or a fund that replicates this index directly in the US. And the growth in many cases can be much higher than 4-6%, and you can see that it can be 10% or 20%, but in some years there is a massive shock like 2022 or 2008, where you can lose 10, 20 or 30%. And actually I have a homework assignment to analyze S&P 500 drawdowns throughout its whole history from 1950. The important thing here is that if you look at the average annual return, say you are a very long-term investor and you want to accumulate your money for retirement, and you do not check intraday, intra-month fluctuations, and you just add some money to the fund, and the data says that the average rate of return is 10% over a long period of more than 80 years, or actually 100 years. And if you deduct the inflation, which is 3-4% in the US, you will get almost 7% per year. So it is not bad, but there is a substantial risk, bigger risk than you work with banks, or you invest in a debt instruments like corporate debt or government debt. And finally, on this topic, on data-driven decisions, you can actually think like, why do we care about 2% or 3%? Or 5%, so it's still less than 50%. I'm not doubling my wealth in 2 years, but this is a long period game. And actually, the difference between 2% that you have in your bank and say 6% that you can easily have with debt investments is more than three times, and it's even bigger if you start working with stocks and you have the benchmark of 10%. So say for 10% your current wealth will be doubled in 7 years. But if you have only 2% of return, your current wealth will be doubled in 35 years. So what's the recommendation, or what's for your projects throughout the course? I think that's the biggest question that you need to decide for yourself. What's the end goal of this course? Say, if you want to do some trades, if you want to have your wealth increased, what are the criteria? For me, I would say I try to chase just psychologically positive return. I do not like losing money, and I have a strict rule that for any given moment of time, between 6 and 12 months, I want to see the positive returns in my rolling portfolio value. Then you can decide to mix equity and bonds, stocks and bonds. You can decide that let's have some risk, but not too much of risk. Because with stocks, if you're just starting, you may lose a lot, especially if you are not investing in the broad index. So that's the next stage. That now you combine different asset classes, and you can add crypto, for example. You can add international stocks, so it can be more classes than just two, and you can calculate the average returns for the mix of classes that you select without any machine learning, just based on your knowledge or articles that you read. But also, when you mix several asset classes, you may lose some focus. And the next idea is that your benchmark can be just S&P 500. If you are an equity investor, a stocks investor, and you focus primarily on the US, and you want to take more risk, then you decide that your benchmark is S&P 500, and you compare not just average growth in the last 30 years, but you can compare with this index every single month or every single year, and aim to deliver an additional return versus this index. Because we are trying to build some complex strategy, it should deliver you something more than a simple strategy. So that's why I show it here, a sweet spot, and the conservative sweet spot for us, if we are looking into the US markets, should be at least 6 to 10% returns per year net of inflation. I also added 2 links on the world-known investors and companies like Warren Buffett and Renaissance Technologies that aim to deliver much higher returns. So Warren Buffett has an average growth of 20% over several decades, and you can read about it in a Wikipedia article. And Renaissance Technologies is probably one of the largest funds in the world, and there is a book in my course that I've mentioned. It's called The Man Who Sold the Markets. It's about Renaissance Technologies. So they claim that they reported 60% gross growth achieved over many years. But there are very few companies, probably one company that in the world that can do this. So if any of you have a goal to earn 50% or 100% this year, probably this course won't teach you these skills. And I like the concept of a risk-reward curve and different asset classes. So we covered debt instruments like government bonds or corporate bonds, or 60% stock, 40% bond portfolio. So generally we started from low return instruments and low risk. So you can see here volatility is a proxy for risk, and it's a horizontal axis, and vertical axis is annualized return. And there is an efficient frontier, so where you select less risky or more risky instruments, and in that area, in that world of instruments, for the selected risk, you can achieve this efficient frontier. So you can expect the volatility or risk that you need to take when you select some rate of return. And generally, usually you will have a more risk and more volatility when you select higher returns. Okay, so I think I've covered all of this. That for your project, for the Capstone projects, the goal of this module is to select the criteria of success. So select how risky are you, what is your risk return profile, what is your expected outcome, and then you can optimize on these metrics, business metrics, if you want, with machine learning metrics or simulation metrics. Okay, practical setup. As I have said, I normally use Google Colab. It's probably not the easiest thing for the experienced developers who can do coding in IDE, but it has many benefits. If you just start coding, there are no barriers to start. No installation required. There are built-in AI features, Google models, Gemini 2.5 and 3, and they are smart enough and free, which is important. It has a lot of pre-installed libraries. You can also select GPU, TPU access, like powerful processors for some period of time. If you need to train a model, you can select that mode and be granted a powerful machine for a few hours. It's easy to save and share, as you have seen from my example. You see the output of my code. It can also handle dynamic visualizations. So when you open some of my Google Colabs, I use Plotly Express oftentimes, and it's not just a static graphs. You can hover your mouse, you can get additional stats. Generally speaking, interactive dynamic visualizations just on the notebook. So you don't need to build a website, you don't need to build an interface. It is cloud-based, it works from any device. But there are also problems with these solutions. Sessions may disconnect if you are running a long or resource-intensive tasks. You are not guaranteed to have the resource. You may need to re-upload files. So if you are using any external files, you need to upload them every time you create a session. And free tier has usage limits. I rarely hit those limits. So normally it's enough for me to do the free tier. As an alternative to Google Colab, You can use Jupyter notebooks or Anaconda setup, full local control, no disconnects, but you may need to spend some time and work on your local environment. And it depends on your computer speeds, laptop, so it may work slower than Google Colab. And alternative number 2 is an IDE, so that you can do AI assisted development. You can connect Jupyter Colab kernels and do the hybrid development, so that you have a production code somewhere or Python files, but also you have a notebooks which you run once and you leave them as a reference for your research. Now let's list the data sources for stocks analysis. So firstly, I use most of all Yahoo Finance, which is a free data source. Sometimes it is down and sometimes you need to find some replacement, and there are not many replacements or free replacements for Yahoo Finance, so we hope that it will be working for us. Sometimes I use massive.com specifically for news articles. It used to be called Polygon.io, so it was a major rebranding, and I believe it costs about $20 for a paid subscription, but it also has a free tier with 25 calls or few calls, which can be enough to download data you want. Say for news, I can download 1000 news with just one call, and it's enough for me to use a free tier from this paid data source. So next set of features are technical indicators. We will cover them in Module 2. A lot of investors they use technical analysis. We will generate technical indicators using a model called TA-leap, but you can make your own calculations. They are all well-known metrics which are based on daily stats that we download from Yahoo Finance. Then macroeconomic data. We've seen today data source called FRED or pandas data reader, which is a wrapper around several data sources, including FRED. For European markets or macroeconomic data, you can use Eurostat. I showed it and used it last year. I believe it's not that convenient, but if you're investing on the European stock exchanges and you need European markets macro stats, you might need to use it. We might use some of the financial reporting. I know that many people want to use classic financial analysis metrics. I'd say I'm using the dates from the financial reporting. So when we have a quarterly earnings report or annual earnings report for almost any company, that means that price may fluctuate around those dates. So you can build an event-driven strategy around the dates of the reporting. News, I use massive.com, but there are also alternative libraries like News API, or you can read directly from Twitter or Reddit. Fundamental data. Many data providers for fundamental data. There is a limited set of fundamental stats on Yahoo Finance. So usually we use only OHLCV, which is open, high, low, close, and volume data, daily or hourly. But also Yahoo Finance provides additional stats on the financial reporting, And the problem with this it's that it provides only last 4 years. So if you are building a model and last 4 years is enough for you, then it can be a good source. You can also do web scraping, and you can also read stats from any website if you write a powerful bot to scrape the data. Alternative data, I do not use any of the alternative data as of now, I believe, but you can look at sources like YouTube, streams, satellite imagery, social media, app usage, credit card data. So anything that you can find related to the companies that you're analyzing may give you some proxy information about the profits or revenue or growth that company currently has. And finally, events, again, earnings calendars. Normally these important events are announced in advance, and you can expect those events, and you can build strategies around those events. But also there are other forms that you can read. ETF, exchange traded funds, flows, how big companies or big hedge funds invest their money, and they come with some lag, but when they release their stats and everyone knows where big money go, it can change the market dynamics as well. I told you that I won't cover any of the stock screener ideas here, and I think that a lot of stock screeners are actually present today at the market. I like TradingView. You can use whatever you want. The idea here is that if you want to find an idea for the project, or some category, or some country, or some focus generally, the first thing to do is to fill the data and try to define those criteria. Chat with AI and chat about the most important metrics. For example, here, this is a screenshot from the last year. Say I'm focusing on the US market. I want companies to be included at the index S&P 500. I want to have companies that are paying dividends with more than 2%, that have revenue growth of more than 0%, that have a low ratio, attractive for investment, PEG ratio, and many other metrics, and say upcoming earnings days next week. Even if you open this TradingView screener and look at the features that are offered there, that can give you a very good understanding of potentially correlated or potentially important features that you want to include in your dataset. So, major recommendation is just test any idea with the easiest possible way. You don't need to write complex code to read and collect this data from various sources and API calls. Potentially you can get this data on one website for free. So now we will talk about Yahoo Finance and particular subset of these data source, open, high, low, close, and volume indicators. Just because this library is quite important for the course, I've included a link on PyPy, where this project is published, and you can see how stable it is when there was a last update. There are a few articles, even from a Yale University. They're using this library to download data about stocks, and it's quite powerful. You can get a minute, hourly, daily, weekly, or monthly data. I usually use daily data, and for the daily data, you can have a history, I believe, of 100 years or full history of the US and other market stocks. If you select minute data, probably you will have a few days of history. I remember when I tried analyzing crypto and selected hourly data, it was up to 2 years. So also there are different asset types. We've covered S&P 500. You can look at other indexes, and there will be a home assignment on comparing different indexes. I know there were questions about European markets, Brazilian markets, Indian markets, and you are more than welcome to look at a broad set of indexes and companies, and you can read data just using this one source. Then bonds, crypto, ETFs, currencies, options, everything is available here. And some of the fundamental data last 4 years. I will show you a code snippet. So let me find this somewhere. So that's how I normally download data from Yahoo Finance. There is a ticker, and you can open Yahoo Finance and find some company or index that you're interested in, and you will see there is a ticker, and this ticker is normally seen in this HTTP address. And then you can use this ticker to download data. So with one call, YF is a YFinance library. You need to install it here or in your local environments, create ticker object and download daily prices, and actually with one call you can download the full history of daily prices. That's why it's called open, high, low, close, and volume, because it's all data that you receive from this call. And then you can work with this data, treating it as a data frame. You can define additional metrics like returns in 1 year. So if you want to see how this index grew versus exactly 1 year ago, and normally 1 year has 252 trading days, you shift the metric on 252 days ago. So that's column adjusted close last year, and that's about vector calculation. So we will cover this on the next lecture, but the important thing here is that you're shifting not just one observation, but you're shifting the whole vector. And then you define year-over-year growth as simply dividing one column on another, and you create this year-over-year growth metric for every single record throughout the pandas data frame. So that's the normal way of operating with Yahoo Finance and pandas in Python with financial data. Okay. So we briefly covered paid data, massive.com. I'm not asking you to download any of the paid data, but if you are serious about your investment and you already have some of the trading operations, I highly recommend you trying this, because in my experience, Yahoo Finance can be down a few days a year. Macroeconomic stats, same thing. That main database is FRED, which is FRED, Federal Reserve Economic Data for the US. You can also find major indicators or major list of metrics on other websites like Trading Economics, for example, this free website. You can scrape it, or you can look at the metric names and think whether you want to include those metrics into your project, and then try to find those metrics on FRED, which is more stable, because Scraper can stop working at any given moment, or this website may have not the most updated data, and normally it's quite important to receive the data day to day when it's available on the market. Okay, financial reporting. Financial reporting is one of the most complicated things for us as a data analyst, and we won't use it in this course, but you can absolutely look at the history of the financial reporting data, or download it from some paid source and use it with fundamental indicators. The idea of this website is to tell you that there is a system called Edgar, and it has millions of files submitted to SEC by companies, so you can download all of them if you're a good developer and you want to parse these unstructured data sources. You can do this quickly, spending less money, and build your strategy around this. But we won't be using a lot of financial reporting or fundamental stats data. Another interesting idea is web scraping, and some of the websites you don't even need to scrape anything. For example, I like this website, company's market cap, and it has an endpoint. It has several endpoints, but this is most profitable companies. So you have some ranking of the companies, and there are some ads on the website. But one thing that you can see here, you have a button to download the whole list. So this list is updated every day. You can copy the link, and you have a list of 10,000 of companies compiled from a website in a moment. So this can be a beautiful hack for you to quickly generate a global set of companies that you want to choose from, for example. Okay, financial news. I wrote a few articles about it, listing it again. Usually people are reading financial news around the earning dates or financial news about some big contracts, and there are few large providers that create those financial news which you can read in some API. Other related data, you can try to see to find contracts data, IPOs data, conferences and announcements. Idea from 2026. I actually haven't looked deep into this. I'm not using it, but I've heard that tokenized stocks is a big trend or trend that is getting bigger and bigger right now. So if you want to analyze it, you can select this alternative or unusual data source and go deep with that data source. I know it's many links covered here. You have all the slides. You can click and check those links and get even more potential data sources for your project. So finally, a cheat sheet for your project. If I were you, I know that probably 30% of participants said we don't have any idea for a Capstone project right now. So if you don't know what to analyze, I would advise you to select one market or country, or go global but select one asset class like crypto or a specific vertical. So let's assume that you've selected one country, then or a scope of assets that you want to analyze. It can be 1,000 assets or 5,000 or just 100. Then choose benchmarks for comparison. So it can be just an aggregated index or some average growth for the whole vertical, for the whole country, anything that you want to compare with. Then try to think about macroeconomic indicators, global or regional or both global and regional, that may affect your market or country or selected vertical. So we've listed some of the macroeconomic indicators. We will cover more of them next time. Dataset size. You may need to think, how many companies do you want to include? What time period and history do you need? I normally use 20-25 years of history so that I can generally get all the features throughout this history. But if you do not day trading but hourly trading, or you look at the emerging vertical like crypto, which appeared less than 15 years ago, you just don't have 25 years of history. So you need to think about this as well. Fundamental data. If you're investing in stocks, do you need company fundamentals? How you can get those fundamental data? Do you use just last 4 years? Do you scrape it somewhere? Do you use paid sources, or you just do not include this? And financial reporting and alternative data, that's big data sources of unstructured information. There are some startups that try to analyze it and generate features for you from this unstructured information. So you can use those, or you can use SEC filings or Edgar filings for the US, and other stock markets also have similar systems where you can download the financial reporting data. Important thing for your projects, and I will say it again, do not leak the data. So think about the fact when every single data point was available. For example, I have a GDP growth in the US, and it is a quarterly indicator. So that's the data on the growth for the second quarter in 2026 should appear not immediately, and that's an important thing. That's you may have a daily trading sets, and you may have this macro indicator as a feature, and it's important to include this feature only from the date when it became available, and it can appear in maybe 1 month after it was released, after the period is over. So this release date is specifically for financial reporting or financial metrics like earnings growth or earnings per share. They appear not immediately after period is finished, and when you compile a data set for the last 20 years, you can just grab the data on all closed periods, on all metrics, but then you create a precedent that you leak the future data that was not available at a given date to the dataset. So recap for today. We are almost at time. What we've learned today. First, we've discussed the financial rate of return. So what's the balance between risk and reward? That's any additional reward or additional returns usually come with an additional risk. Then we discussed how you can develop an investment idea, what you need to look at, how to select a market. Then we had a brief overview of different macroeconomic data and indicators that you may want to include in your project. And also we covered Yahoo Finance, which is a major data source for stock and other asset classes. Finally, I want to give some recommendations for the course. I'm sending Telegram and Slack announcements, so if you have any questions on the course materials, on the home assignments, feel free to ask there in a Telegram discussion or on Slack, and you will quickly receive a lot of help. This is especially important when you're solving homeworks, and sometimes people get frustrated with the different results that they get. Sometimes API return not exactly the same data that I saw when I was preparing the homework. So you may ask questions whether people have the same problems. Then try to prefer the simplest option when possible. Try to chat with the AI, try to find an alternative solutions before you go hard and do a lot of experimentation and coding. Then I highly recommend you to finish home assignments. I know that many of you have a day job and you don't have enough time, and you think that lectures or day streams are enough. Believe me, it's not enough, and you start to understand more. And I see a lot of grateful feedback when people say that home assignments, they actually help me a lot to understand everything that you're talking about. And then start working on the project early and allow time for multiple iterations. You will have 2 questions, open-ended questions in the first home assignment on the data that you want to include in your project and on your idea that you want to work on. And finally, leverage your edge. I know that some of you are better analysts, some of you are researchers, or you're ML professional, so you can build a better model. You definitely should have some edge by living in a specific country, and you know a lot about things happening in that country. So my advice, not to build very global models, but build something local which may work better in your local environment. Course logistics, homework. I published the homework today. It's still not open yet for submitting results. You can start looking at the homework. It's quite similar with the last year homework. It just has different questions and different time period, but the structure is the same. It's 5 questions and 2 extra open-ended questions. The deadline will be 3 weeks from now. Normally we will have 2 weeks between sessions, but the first session has a lot of information and it can be overwhelming to some of you. And also we have many new people joining in the first week of the course. So we will allow you more time between first and second stream, and the deadline to submit will be 3 weeks. I try to create home assignments to be straightforward and relatively easy. Sometimes it's not like that, so I want to have some learning which is included as an outcome to the homework assignment. And as you can guess, some of the home assignments tend to be harder to solve. So please provide any feedback that you have in the submission form. I read all of them and try to make your home assignments even better. And of course you can get extra points by posting your homework results or project results and tagging Python Invest and datatalks.club on any public platform. So we want this course to be known by everyone who wants to do the stock markets analysis, and we want to have a bigger reach. If you have your friends, analysts, or just interested in stock markets, that's actually a very good idea to involve them as well. This works for me when I try to write an article for my website. I try to find someone who is interested in the same topic, and we have a mutual commitment that we progress on the material, and we create something and not procrastinate. So the idea can be the same for you. Just find a buddy and it will be much easier to work. And finally, if you haven't seen our pre-launch Q&A session, feel free to watch it or add more questions to the link I shared before. I will look at them and I will cover some of the questions asked in that link or in homework. So that's everything for today. Please follow the announcements on Telegram and Slack. and emails. I will send it everywhere with links on this stream, on slides, on Colab notebook, and on the homework when it will be fully released in a few days. But for now, you can read the homework in this folder, cohorts 2026 homework 1 MD, and start writing code for this homework. Yes, as some of you asked these questions, submitting the solutions, the form link for submitting will be available here in the end of the homework file, and the leaderboard link will be available here as well. So when you submit, when the home assignment is closed, the leaderboard will be updated and you will see your ranking against others with the number of points that you got. That's everything for today. Thanks for joining the course, and see you next time in 3 weeks. Follow the announcements. I will update everyone with the next stream and when the home assignment link will be available. Thank you and have a great week.